Hello everyone and welcome to Elliott Wave Cafe. It is Saturday here in Chicago. This video will probably be posted tomorrow morning on YouTube, but welcome everybody. I'm your host, The Cowboy. This is Elliott Wave Cafe. Let's get started. All right, before we jump on to this week's action, let's let me take you over to my Twitter account here. You can follow me at Elliott Cafe. Go ahead and give that a subscribe and a follow. And then you can also find a bunch of information here under my free newsletter. It's called The Pigeon and the Statue. I have a daily newsletter every single morning. It's called The Daily Drip, where you can find the latest updates and commentaries on the markets. Then every week I do a Strong Pigeon report where I take a look at all the markets in here, and I try to read the price section on them, and then slowly we'll build up a video library as well with further videos to come up on there. So without further ado, let's get onto the markets. Basically, we've had a pretty serious sell-off this week, and it was mostly led by the financials to the downside. There were some cracks into this financial system, especially that started with the Silicon Valley Bank. I know everybody probably already knows all this news. I don't have to repeat them, but it created a little bit of a panic on the street, and we've had VIX climb all the way up to 28, almost 30, and some definitely heavy sell-off. So you can see in here, S&P 500 lost 4.5% on the week. It had come and closed below some key moving average, and also dropped below this declining trend line that we used as a guide when it was breaking out and kind of trying to follow it with the more of a bullish count towards the upside. Now this kind of bullish perspective starts to be definitely challenged as we're kind of moving lower, and I'll show you the counts, but I wanted to go first through this kind of quickly weekly view so you can kind of see where everything kind of stands in terms of price action. So the drop is heavy. It's not extremely damaging yet, but it's definitely shows that it could be the beginning of something larger. So we'll see what they're going to react, what the Fed is going to do over the weekend, what they're going to do next week. We have inflation data coming on Tuesday, so there's still a bunch of things that kind of that will need to happen here over the next couple of weeks in terms of news, and we'll see how the market will react. But for right now, we're sitting on some shaky ground for sure, because everybody's afraid of more contagion, and with banks kind of holding a bunch of their reserve assets into some of these bonds and holding maybe massive losses. Who knows what's going to happen, right? But let's not get into that. Let's continue to just kind of look at the price. Nasdaq also kind of came lower. It still remains a strong outperformer year to date here, and it's holding above this trend line as well. It's outperforming the rest of the markets. We did have again just a bad weekend here with 3.75% sell-off, so not as bad as the other markets, and it's still kind of holding up slightly now above its 200-week moving average. You can see a convergence of these average lines, which means basically kind of a sideways price action. It's not a big direction in this market, guys. I mean, when you have the moving averages kind of all pinched into the same area in here, that suggests that we could just continue into a big chop ahead, right? Market drops lower, then some news come out, then we go back up, and it's still just kind of in the middle of nowhere. Here is the Nasdaq Composite, and then Dow Jones also lost a little bit of this support here. We'll take a look at the counts. Remains above his 200-week moving average. This still looks fairly decent as a corrective a pullback, but it needs to be proven by the market that it can build up, a bullish candle and try to break up to the upside instead of the downside, right? Russell lost the most, or 8% on the week. So I think a lot of these kind of regional banks and, kind of smaller stocks, medium caps, stuff like that got hurt the most this week. And you can see, I think it's the heaviest candle we've had, since the beginning of the bear market. I don't think there is any of these black candles. If you look, maybe there's one back here. But I think this one is larger than that. I don't even have to kind of look at the percentage loss, but I'm pretty sure this kind of takes the cake. So heavy move to the downside below all the key moving averages, below the trend line in here. It does make this look like a three-wave move to the upside now that we're getting this type of a reaction. Remember, we've been holding this 185 level for a long time, and they finally kind of took it out. And I was talking in last week's video about the volume in here, right? And the idea that, I want to see a break of the volume to the upside. Well, it did happen, but it happened, with the bears kind of taking over, and it looks like a pretty serious candle to start something probably bigger. Bitcoin, lost a little bit, not that much. I mean, 9.7%, but when you think about Bitcoin, that's not a whole lot. And it's still kind of sitting above this 17,818K support. We'll see if that's going to continue to hold or not, but it's coming under pressure as well with the rest of the cryptos. And then TLT, people starting to buy bonds again, right, to just out of fear and move stuff into safety. You can look at the 10-year yields actually dropping to 3.7. Usually when you have a drop in yields, you have more of a risk-on market, but not this time, right? It's just yields dropping are saying that there could be trouble brewing. It's not a big drop in yields, right? It was just, a little bit in there, but, definitely something to keep an eye on, because, this market could quickly send signals of Federal Reserve stepping in, cutting rates, if there's any contagion fear, if that could be said. Dollar also sold off, right? Something surprisingly, that's not really matching with what you would see on a risk-off asset. You would expect the dollar to get bought and people start to move into that. But, we've had a declining week here. Not much, 32 basis points, but we did get the reaction that we were looking for from the 105.5, as we were kind of continuing to monitor that from these lows, and we've gotten a little bit of a pullback. And for daily updates on this, just kind of go ahead and go to the Pigeon and the Statue here, Daily Drip, and you'll be up to date on every single market, pretty much kind of how I'm following the counts along and what I need to switch, and kind of what every market kind of does on a day-by-day basis. So back on the weeklies in here, let's take a look at gold. Gold had a pretty decent week in here. It kind of reacted well from these moving averages, created a little bit of a hammer. I don't think gold is going to have, I'm looking for another leg lower. Again, just watch that Pigeon, the Daily Drip, but I think this is probably just a B wave, and we're probably going to sell lower again. That's kind of my thinking. It was a little bit of a buy this week with this kind of fear mongering happening around. So copper just sitting still above support, not much there. WTIC not doing a whole lot. The other markets outside US sold off as well, 3%. And then VIX, look at the candle in the VIX, right? Massive candle, almost up to 30. So this, when you have VIX into these levels, definitely you're going to get some major sell-offs in here. So let's quickly take a look at the counts. Let me jump over to here. I think this is what I'm going to start from, and take a quick look at the Dow Jones Industrial. So I'm still looking at this, under the bullish scenario. As a wave 1 and a wave 2, you see that in the updates, WX, and then maybe an ABC for a wave Y. There's still plenty of room for this to unfold. If you take some fibs, once you get below 31K, I'll start to be, a little bit more concerned that this could become something bigger. Until then, I have to respect this as being an impulse. And, for this as being a correction against the trend. I don't want this to develop, let's say, too much into too big of an impulse, although you can still count it. Instead of a W, you can put an A, and it becomes a flat. So A, B, and then 1, 2, 3, 4, and 5. Let me get it with this cursor. But it's pretty basic, right? Pretty basic Elliott wave. So A, up in B, 1, 2, 3, 4, 5, and you can still come here and do just a regular flat and then go back up from there. Okay, so listen, I know the markets are feeling scary, and it looks like they might want it to break lower, but do not ignore, some of these counts that are still looking fairly decent. Okay, now you don't have to, believe them 100% in here, or, just this is all or nothing, right? Because there is bearish alternates, but it is something that needs to be kept, I say, with a high degree of probability in here. As long as you stay above 61.8, I think it's got a pretty decent chance of continuing to work out. Now, if you go back and take a look at something, so that's the flat here, right? A, B, C. And then on the bearish side, right, if that's a 1 and that's an ABC, and instead of this being a wave 1, that's C off a flat, that means that that's a 1, 2, and then you're actually beginning, let's say, a much larger decline. So you do a 1, 2, 1, 2, and then you're in the middle of a 3, 4, and 5, and that's when you break below 61.8, and then you start to build this third wave, which obviously needs to be moved here. But that's kind of how you get to something that's more bearish once some of these levels start to fail. And I have something that's a bit more I don't know, let's say calm, not as much of a sell-off as this count shows, but basically, let's say here 1, 2, 1, 2, or this whole thing here. I can eliminate this degree, and you can just place this. Sorry, let me just delete that. But you can eliminate and put this wave 2 up there, and then just stay at the minor degree of trend and look for this to be right a flat in a wave B. Just A, B up in C, 1, 2, 3, 4, 5, and then eventually you get down to 24, 25, where you would complete this this kind of C wave and this wave 2. It doesn't have to get that aggressive, but something like that. You move wave 2 here. I'll have to take this out. So this would be just give you like a wave 2 correction that would come below these levels on the Dow Jones. Okay, let's quickly go to the S&P 500. There is a bearish count in here as well, but this now looks more and more the moment that this guys here get taken out, 37.64, this will become a 3-wave move, and we're going to be looking lower. There is counts out there that suggest that this could be a big old triangle, which I'm aware of, but this is kind of my line right there, 37.64, and breaking below this 3900, right? That was a pretty key resistance, then support, and we broke through it. So 37.64 is the key for for the bearish alternate in here to start to take place on the daily, right? Down in A, up in B in 3 waves, and then the next leg would be towards 3200 here in this kind of C wave, and that's just kind of starting. Let's say 1, 2, 1, 2. We're probably going to get a little bit of a pullback next week, and then 3, 4, and 5, 4, and 5, versus this guy, which starts to look a little pinched because now the second wave becomes a little bit big. You're in the 78.6, so still okay, but the odds of this working out are very, very small at the moment due to the depth of this wave, right? Something extraordinary would kind of have to happen for this move to reverse to the upside, overtake 40,080, and if it does that, if it gets back above 40.77 here, something like that, right? Then again, the bulls are going to start to get excited about this and say, fine, 1, 2, 1, 2, and then you begin to build a ramp to the upside on here. What happened there? Okay, there you go. All right, so that's just a quick look at the S&P 500. Let's take a look at the Nasdaq. Nasdaq looks a bit stronger. It's got a bit more room still to work. Although the second wave also is becoming a little large, but you're above 50% still. You're above 61.8, right? Just like in the Dow Jones Industrial. And this whole thing again could be just a complex move here in some kind of let's say you have an A, B, and then 1, 2, 3, 4, 5 for a WXY for a wave 2. Doesn't matter which one kind of pans out, but staying above this 11,500, I think that's pretty key. Again, for a continuation high. Otherwise, you start to think, that's a 3-wave move up, and then you're breaking lower. So that level here, it's the key level. 10,696 on the Nasdaq. Let's take a look at the Russell. Russell was the one that was the heaviest. That's the bearish count, kind of the more calm, right, into a second wave pullback. But then, you got this guy here, A, B, 1, 2, and then you know, for the 3, 4, and 5 to kind of begin. So guys, listen, it's what's going on here. You know, if you're breaking below these levels, which it looks like they might want to try to do, because that looks like a 1, 2, 1, 2. So you got 3, 4, and 5, 4, and 5. So by the time you're done, we're probably going to be below this level. That's going to make this a 3-wave move. So, you know, if you want to shift this wave A here, you know, and create this as some kind of a, I don't know, some kind of an impulse with a weird, I don't even know how to count that. Maybe that would be a 4th wave. This would be a 5. And this wave A moves here, and then you get your ABC, and now you're beginning, let's say, your 1, 2, 3, 4, and 5, and you drop lower in that C wave. But one of the most important things here is the fact that, you know, we failed to rally in this market. You know, from the ideal 1, 2, 1, 2 would have been right here, you know, with this rally, and then the moment it failed back and it's starting to lose some of these levels, you know, that's the signal like, hey, you got to listen to this, that, you know, they don't want to take this market bullish. They're probably going to, you know, want to do another leg lower. So maybe this news and everything is just kind of the ripe environment to do that. And again, the moment you break below this is probably, you know, very likely for that to start to happen, you know. And that's about it. Let me just quickly take a look at Bitcoin. I'm going to get it out of here. Where is my Bitcoin chart? Oh, did I lose it? Oh, it's right there. Looks like it's still a bit positive. So looking at the weekly time frames, we're sitting, you know, right on top of the 200-day moving average. So don't mind that it's a weekly chart. That's the 200-day that's plotted, so I can see all the time what it is, and that's the 50-day. So you can see that we bounced from these levels, but it's a pretty bad, you know, week in Bitcoin as well. And you know, you can see this into my updates as well. I'm looking at the 1, 2, 1, 2, 3. I think we got to do a 4 and a 5, a 4 and a 5 to kind of finish up this declining sequence in this wave C of a probable wave 2 under the flat scenario. So if you know, if there is a chance for this market to kind of reverse, it would be, you know, let's say we are flat in a wave 2. So that's the top of the wave 1 right there, A, B, and then 1, 2, 3, 4, 5 for a flat, and then you go to the upside. It's, you know, it's a bit of a stretch because it's a long C wave. Other than that, you know, you would have to kind of go to, I'm going up on the daily because I wanted to kind of see where the 61.8 is, and it's exactly at about 18,657. That's where it kind of sits. And the other thing could be that that's just wave A of 2, right? So instead of that being a flat, so this is where you would terminate wave 2 much faster. But you can also do this wave 2 where that's an A. You know, you go up in B and then you do a C wave pullback a bit later. I have some time fibs into those updates up in here. Let's say you go to April, May, and then you finish up the wave 2, and then you begin the next rally higher. So that would be the close, kind of the close second. However, under both scenarios, I still think you're going lower a little bit. Let's say maybe come back toward this support first into this kind of sell-off that we're getting right now. You're finishing up either a wave C or a wave A, then you're going to get a pullback, and depending on kind of how this happens, you know, we will know if it's the time to move to the upside or if there's another leg lower kind of coming in Bitcoin. And here are some of those time fibs that I've placed on here for you guys. It's just kind of raise this up. So that's time fib wave 2 versus wave 1. So right now you're not even about 38% in this wave 2. 61.8 comes in at about just kind of find what that is. It's about April 18 where you would have 61.8 travel in the wave 2, which is a common relationship between wave 2 and wave 1. So you know, that's the idea in over in Bitcoin. The rest of the coins, you know, are taking a little bit of their nap, and it's just it's just a market you know, that's been kind of hurt here with the latest risk off moves. Hey, so the other thing that I forgot to mention is basically the bearish alternate in here that I haven't been talking about. I've been you know, looking at this when we had the rally first to the upside in here, and it got, you know, a little bit of engagement on Twitter when I put that out there. But it's basically you know, this wave that this could still be a wave 4, you know, and with a further decline in a wave 5 that's just beginning right now. So we're looking at this as an A, B, and then up in a C wave to the prior wave A highs right in there, right? So A, B up in C, and then this would mean that you would unfollow as such. You're probably doing a wave 1 now. You know, again, we're going to finish that off maybe somewhere up into this support, and then you're going to do a second wave. Okay, so that's going to be either B under the scenario that I showed you before with the second wave pullback, or wave 2, and then if you break below here, then that's going to become a 3, 4, and 5, and you can send Bitcoin all the way to 12,000, maybe even a little bit lower. But that's you know, whatever this wave 1, I'd say 5v1 in terms of percentage, whatever that is. I don't know exactly what that is, but it's, you know, just visually kind of here, maybe a bit towards 12,000. So that's something that I just kind of forgot to mention here as I was doing my presentation. So I had to insert this little recording on here. So that's just the update on the bearish side. Thank you. So that's it. That's all I got for you for today. I appreciate everyone for watching. Please visit me on Twitter. Visit me in the Pro Room. There's a link below this video. You know, give a like, a subscribe, you know, leave a comment, and I'll talk to you later. Bye-bye.